Hello. In this video, I'll help you get started on the Chapter 3 homework, which tests you on the concepts of analyzing business transactions with T accounts. Question 1 is about Bobby Collins, who decided to start a dental practice and has 5 transactions for which you are tasked with creating the debit and credit. Let's look at the first transaction together. Collins invested $82,000 cash in the business. Let's analyze this transaction to figure out what account we need to debit and what account we need to credit. We first determine what accounts increased or decreased. Then, what account types these accounts are. And, finally, we use the dealer mnemonic to determine whether to debit or credit the account. In this case, the business now has more cash. So, cash increased. Cash is an asset and assets increase with debits. So, debit cash. Every transaction has at least one debit and one credit. The second part of this transaction is that the business now owes money to the owner of the business. Monies owed to the owners is considered part of owner's equity, and owner's equity accounts increase with credits. That means that we credit capital, a special owner's equity account where we track monies owed to the owner. Let's enter the debits and credits into the form. Debit cash and credit Bobby Collins capital. For the second and third part of question 1, we need to enter the transactions into the T accounts. So, let's look again at the first transaction. For that first transaction, we debited cash and we credited Bobby Collins capital. So, let's debit the cash account by writing the transaction number 1 into the first column and then the amount in the second column. Next, we will move on to the capital account and write the credit transaction into that account by writing the amount of $82,000 into the third column and the transaction number into the last column. For question number 2, we have several transactions that have been entered into T accounts. Our task is to prepare the trial balance and the income statement. To do that, let's look at the cash account. We'll add up all of the debits and we will add up all of the credits and then calculate the balance. When I add up all of the debits, I come up with $223,000, and when I add up all of the credits, I come up with $62,700. That means that the balance of the cash account is $160,300, the difference between the debit activity and the credit activity. Let's add that on the next slide into our trial balance. We can now enter the account name cash and the amount of $160,300 as the first item in our trial balance. What's the next step? That's right, we need to look at the next T account and find the balance. The next account is accounts receivable in our list of T accounts and it has only 2 transactions. So, subtract the credit amount from the debit amount and write the name accounts receivable on the next line and the balance amount from the T account. Typically, each account has a number and normally you would list the accounts in the numerical order of each account. However, we'll simply go with the order that the T accounts appear in. Be sure that you enter the balances into the correct debit or credit column. How can you be sure? The trial balance totals must balance. Once you completed the trial balance, you are ready to move on to the income statement. Not all accounts from the trial balance belong onto the income statement though. The income statement calculates the net income or profit and we calculate that by entering first the revenue and then the expenses. Remember, you can use the Check My Work feature on each question and then click on Return to Question to go back. Question 3 is similar to question 2 in that we have a list of T accounts with activity for which we need to calculate the balances. Our task is to decide whether they belong into the statement of owner's equity or the balance sheet. The first step is to complete the statement of owner's equity. Why? Because we will need the ending capital balance for the balance sheet. The first line we need to write into the statement of owner's equity is the beginning capital. The beginning capital is $172,000. Let's enter that now. Next, we need to enter the net income, subtract the amounts the owner withdrew from the business, the drawings. Now, we are ready to calculate the ending capital balance. For the balance sheet, find all of the T accounts that are balance sheet accounts and enter them into the correct sections. Don't forget to enter the ending capital balance into the owner's equity section. For question number 4, we need to enter each transaction into T accounts. Let's do the first transaction together. Alexis Wesson invested $54,000 into the business. The business received cash. Let's analyze this transaction to figure out what account we need to debit and what account we need to credit. We first determine what accounts increased or decreased. Then, what account types these accounts are. And, finally, we use the dealer mnemonic to determine whether to debit or credit the account. In this case, the business now has more cash. So, cash increased. Cash is an asset and assets increase with debits. So, debit cash. The second part of this transaction is that the business now owes money to the owner of the business. Monies owed to the owners are considered part of owner's equity, and owner's equity accounts increase with credits. That means that we credit capital, a special owner's equity account where we track monies owed to the owner. The next step is to post this transaction into the T accounts. Here we go. Let's first put the account name cash on the first account. And enter the amount of $54,000. Next, let's enter the name for the capital account and the credit of $54,000. For this last part, you need to enter a yes or a no to the question whether the transaction directly affected an asset account. Let's talk about the first transaction where Wesson invested $54,000 into the business. The business received money and we debited cash. Cash is an asset. So, we need to enter a yes for transaction number 1 because the transaction directly impacted an asset account. I hope this short video helped you get a good start on your homework for Chapter 3. Don't hesitate to reach out to me with any questions or concerns.